For the past 2 years, Russia's economy has been operating in wartime mode. Factories were converted to produce weapons, budgets were redirected towards the military, and growth has been driven primarily by defence spending. This model held up longer than many expected. Output increased, production lines expanded, and the war economy appeared stable. But the latest industrial data shows a shift. Arms production growth is slowing, key manufacturing sectors are weakening, and the military-industrial base that has supported the conflict is showing signs of strain. Russia's war economy is now looking like it's not sustainable and is destined to collapse. Hi, welcome back to the channel. As you've just heard, Russia's war machine, which has been the main driver for the Russian economy over the past couple of years, this conversion to a wartime economy, now looks to be slowing down and faltering, and this is a major concern from Russia's perspective. If we take a look at the defence-related aspects first, in the 12 months to September, fabricated metal products, so these are things that are used in things like armour, artillery systems, vehicle frames, drone airframes, and weapon housings, that actually declined by 1.6%, and that compares to 30% growth in the period to September 2024. So this has been a huge driver for the economy over the past couple of years, but now looks like it's going into decline. And the move into negative territory suggests material, labour or tooling constraints are now emerging for Russia. So they're struggling, they can't get enough of all of the different equipment or the people to actually put that equipment together in order to keep this part of the economy going. And it may signal that planned expansions in heavy weapons production are now having to be scaled back because they don't have enough metal to actually make everything. And this marks a transition from an accelerated wartime growth to structural limitation. So we're starting to see Russia running short of supplies. Now, if we have a look at other transport equipment, this is things like tanks, armoured vehicles, then year on year to September, there was growth of 6%, which sounds pretty healthy. But when you compare that to September 24, the growth was 60%. That was 10 times more than it was in the past 12 months. Now, the war in Ukraine is still raging. It's not that Russia has scaled back its operations and doesn't need any more military vehicles. There is still the same demand. They're just not producing as many. So this indicates that Russia is now potentially either having to maintain a lot of its existing vehicles, or it's just not supplying as many vehicles as it was in the past. But the problems are not just constrained to what's going on with the defence equipment. This is now spilling over into the wider economy. So manufacturing output for the 12 months to September showed growth of 0.4%, and that compared to almost 9% in the 12 months to September 24. So that is a huge reduction. And when you think that Russia is looking to achieve growth of more than 1% for 2025, it was hoping to achieve around 2.5% initially, but it's had to scale back because of the slowdown in the economy. It tells us that there are serious problems because manufacturing has been the main driver for the Russian economy over the past couple of years. So a slowdown of this nature tells us that there are major problems. And Russia is struggling because it can't access foreign machine tools and components. So it's having to scale back some of its manufacturing, and continued growth will rely upon more investment into new equipment. But the sanctions are severely hampering both overseas investment and also the access to machinery that's produced overseas. So manufacturing, this is a major concern from Russia's perspective. And if we look at industrial output, it grew by 0.3% in the 12 months to September, compared with just under 5% for September 24. So once again, that's more than a 10 times reduction over the past 12 months. And this suggests that the initial boost from converting factories to the wartime model has now faded, and that sectors tied to domestic demand are struggling because of reduced household purchasing power within Russia. And the industrial system is likely to be running near its physical and labour capacity limits, meaning additional growth is going to be harder to achieve. And if we look at the civilian industrial sector, it actually declined in the 12 months to September by 1.1%, compared with around 2% growth in the previous year. And that's because resources have been reallocated towards the defence sector, which is leaving consumer facing industries weakened. Domestic demand is under pressure due to inflation, mobilisation effects, and lower consumer confidence. And many firms have reduced shifts or paused production. I talked about that in a recent video, that some of the biggest companies in Russia have reduced to a 4-day working week to try to keep everybody in employment, but they just can't keep working 5 days because they can't actually produce as much and there's not enough demand. So a sustained contraction here indicates long-term structural imbalance and makes recovery for the Russian economy much more difficult. And if we look at total industrial output, since December, it's down by 3.6%. So that's a contraction. And that indicates a broad and gradual decline in the Russian economy. So this is not a temporary fluctuation, but a trend of cumulative pressure across multiple sectors. Wartime production is facing diminishing returns. More spending is now producing less output. Sustaining current levels would require fresh investment, machine upgrades, and access to advanced components, all of which Russia is struggling with as a result of the heavy sanctions that are against it from the rest of the world. And without those inputs, industrial capacity is likely to continue eroding over time. So, what's causing all of these problems? What are the implications for the other parts of the economy? So, if we firstly talk about labour and workforce pressure, the availability of skilled industrial labour has decreased in Russia due to mobilisation, military service, and outward migration. I talked about it in many videos before, but initially, when the war started, around 500,000 people left Russia. They didn't want to hang around and run the risk of being called up. And since that time, we've seen another million or 1.2 million leaving Russia. So that's around 1.7 million people taken out of the workforce. And a lot of those people were skilled and at the upper end of the workforce spectrum. So managerial, senior management, those sorts of people. They didn't want to be involved in the war economy. And some factories are now operating with reduced staffing levels or have shifted workers from civilian to defense production because that's where they're guaranteed to get the money from the Kremlin. Now, there is low level of unemployment at the moment, but it reflects a tight labour market, which limits the capacity to expand production. So normally you would think that low levels of unemployment is good for an economy, but actually you can get to the point where there's not enough people. So low unemployment actually isn't telling you that it's great that everybody's now employed. It's telling you that we don't have enough people to fill all of the jobs. And that's one of the problems in Russia. And the wartime switch has meant that lots of people have left the civilian part of the economy and are now working in things related to the defense sector. And long term, that's not healthy because if the war in Ukraine stops, then obviously the demand for all of that defense equipment will also reduce. And that would mean that lots of people would then be put out of work. And potentially we could get a very deep recession in Russia if the war ended. So overall, these constraints mean that output growth increasingly depends upon efficiency improvements rather than more labour because they don't have more labour. There's not a lot of people wanting to move to Russia right now. But it's not just problems with the workforce. There are also issues with regards to technology that are causing capacity problems in Russia. So many defence-related factories are operating near maximum utilisation and leaves little room for further output increases. Upgrading production lines will require machinery and components that are harder to access under current trade restrictions because of the sanctions. Russia just can't get the latest technology because nobody is allowed to sell it to them. Some military equipment continues to rely on older designs, as developing and producing new systems requires advanced parts and machining. So that's causing Russia a problem. It can't keep moving on in terms of the development of its defence products because it doesn't have access to the latest technology. And without new capital investment, productivity improvements will remain limited. And this means that sustaining high output will become more difficult for the Russian economy and Russian businesses. Now, if we look at the civilian sector particularly, civilian industries, so those industries that have nothing to do with defence, the ones that were keeping the economy going before Russia converted to a wartime economy, they're experiencing reduced demand and lower production levels. Firms in the consumer and non-military manufacturing sectors have been reducing their working hours, and the shift of resources towards defence within Russia means fewer inputs are available for civilian products. So they're not receiving the same level of investment from the Kremlin that they were historically. And weak consumer demand and purchasing power is contributing to slower domestic market activity. And a prolonged contraction in civilian sectors will affect the overall resilience of the Russian economy because long term, you can't just be a wartime economy forever. You need to have your civilian industry performing well. Now, one of the problems that Russia is facing is that it's had a lack of investment for the past few years. So, new investment in manufacturing capacity has slowed significantly, especially outside of the defense sector, because the Kremlin has been focusing most of its internal investment into those businesses, and that's left everybody else to fend for themselves. Now, higher financing costs, because if you've been following the channel, you'll know that interest rates have gone up significantly in Russia. So if you want to borrow money, it's going to cost you probably more than 20% to get a loan. That's going to make most companies think, I'll wait until rates come back down. But higher financing costs make it more difficult for firms to expand and modernize equipment because they don't want to take on debt to do that. Productivity growth is low at the moment in Russia, meaning output increases require more labor and capital inputs. And we've just discussed the fact that Russia is struggling with regards to both labor and capital because it's lost access to the global markets. And over time, low investment can reduce the ability to shift production towards new priorities. And this places a limit on how long high intensity industrial output can be maintained. So Russia is now creaking at the seams because if you're not getting more capital and investing into new ways of doing things, then everything starts to decline. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking a lot about the shift to a wartime economy that Russia made a couple of years ago. And that shift actually looked on paper as if it was really successful because when you looked at the growth of the Russian economy, it was actually delivering really strong performance. In fact, it outperformed the USA in terms of its year-on-year growth. So there was a lot of people sending me comments saying, Russia's doing fantastically well, you're talking a lot of rubbish, stop making these videos. But as we've discussed many times before, a wartime economy is a short-term measure. It's basically an emergency move that Russia did to try to keep people in employment and also obviously to fund the war in Ukraine. It needed to keep equipment going to the war in Ukraine. So it's diverted a lot of central government expenditure away from the wider economy, so things like health and education, those sort of areas that many countries really value very highly because they give you long-term growth prospects. Russia has been pulling back on long-term investments and making investments into things that it needs for Ukraine. So it provided a short-term boost. But what we've seen in today's video is that the figures coming through for September tell us that the wartime economy is now faltering, and long-term, this is not a sustainable model. You can't build your whole economy on keeping a war going, because at some point, if that war comes to an end, which logically speaking, it must do, because when you look into the realms of history, every single war has finished at some point. Even the 100 Years' War came to a conclusion. So the Russian war in Ukraine has to stop at some point. And you need to look at what's going on in your economy to see whether or not it's going to be sustainable after that point. And if we look at what's going on right now, Donald Trump is really ramping up the sanctions on Russia. I recently made a video talking about the fact that the two biggest oil companies in Russia have now been hit with direct sanctions for the first time. Not entirely sure why they weren't hit earlier than this. It's taken 3.5 years to get there. But those sanctions are really causing a massive problem for Russia because China and India are now pulling back from purchasing Russian oil. And if they lose that income, then the Russian economy is going to be in a really difficult situation because it's spending a fortune. If it stops receiving all of that money, then it simply won't be able to balance the books. So things are hotting up for Russia. So there is a real chance that a conclusion to the war could be agreed at some point in the next, let's say, 3 to 6 months, as a guess. Nobody really knows what Russia will do, but there is certainly a lot of pressure being piled upon Russia right now to stop what they're doing. And if that happens, you need to look at what's left in the economy if you can no longer sustain the wartime move. And what we're seeing from the figures is that the civilian economy is suffering badly. Russia is struggling with regards to the sanctions. It can't get access to things like technology, so it doesn't have the latest chips. It can't move with all of the rest of the world in terms of development. It's having to work on things itself. And IT and technology isn't an industry that you can just invent overnight. It takes a very long time. You have to share lots of data and information and discoveries. And so that's why it's a genuine global market. But Russia is excluded from that general market at the moment, so it can't get what everybody else is getting. So its technology is going into decline. It's also struggling to get things like machinery, components, equipment to keep all of the existing machinery going. So that's also going into decline. And all of that tells us that the productivity in Russia is also going backwards, because when you're working with older equipment that might break down, that's not the latest cutting edge, then it becomes less efficient and it takes longer to do things and becomes more expensive. So all of those things are bad news just in general terms. But then when you layer on top the fact that Russia is struggling with regards to labour, because lots of people decided that they didn't want to hang around and run the risk of being called up into the war. So they've lost over 1 million people from the workforce. Plus, lots of people have been pulled out of their jobs working in civilian industries and are now working in companies that are working for the defence sector. So there's been a real shift in terms of the people. It's now having a huge impact. So lots of genuine companies in Russia that are still selling genuine products, nothing to do with the war, are having to cut back on their working week. So they've cut back from 5 days to 4 days. They're struggling with regards to revenue. Many of them are making losses. And this is now feeding through into the figures. So we're seeing industrial output coming down. We're seeing a fall in terms of civilian revenue. And so if this continues, Russia is going to hit a major depression. It won't just be a recession. It's going to be the biggest fall in the economy that anybody has seen in living memory. So Russia has really caused itself a lot of problems by shifting to this wartime economy. It's unbalanced, it's not sustainable, and at some point, if the war finishes or if Russia runs out of money, then they won't be able to keep the war economy going, and we will have a double impact of a crash in the wartime economy and also the problems that are now being experienced in the civilian economy coming together to create a huge fall in the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking, which is what I'm really trying to achieve with these videos. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. And thank you so much to everyone that's supporting me. If you've signed up as a patron or a YouTube member, really appreciate that support. Thank you so much. It really means a lot to me. And if you've bought me a coffee or sent me YouTube super thanks, thank you so much for that act of generosity. It really does warm the cockles of my heart. And here's something to put a smile on your face.